welcome to the Daily Insights That Matter. We begin today's DITM by talking about India's IIP for the month of September, which has beat all estimates. Now, India's Index for Industrial Production, or IIP, which had contracted by 0.7% in the month of August for the first time in almost 18 months, has increased by 3.1 times year on year in the month of September, largely due to a favorable base. Now, the Index for Industrial Production data, or the IIP data as it is commonly called, is an index that tracks manufacturing activity in different sectors of an economy. Now, all the three sectors saw an uptick on a year-on-year basis on the back of a favorable base effect. Nevertheless, barring electricity, mining and manufacturing posted strong growth on a month-on-month basis too. Overall, the mining, manufacturing and electricity industries contributed significantly to the improvement in the industrial growth in September. Electricity production increased by 11.6% year-on-year in September, while mining output increased by 4.6% after declining by 3.9% in the month of August. Manufacturing too did well with a pickup of 1.8% year-on-year and 2.3% month-on-month. Now, compared to the pre-pandemic period of the first half of FY20, which is April to September 2019, the total industrial production for the first half of FY23 increased by 4.9%, with production related to investments outpacing consumption-oriented production on a consistent basis. Now, the industrial production is recovering as the effects of the global supply disruptions lessen. In the upcoming months, the industrial sector is expected to benefit from a drop in global commodity prices. However, the weakening of external demand and the uncertain global environment could be major challenges for the momentum in the industrial activity going forward. Now, as per data released by the government, the gross direct tax collections came at 10.54 lakh crores, which is up 30.69% than the gross collections for the corresponding period of the last year. Now, direct taxes refer to the tax which an individual or a corporate is supposed to pay directly to the tax authorities in India. Some of the examples of direct taxes include corporate tax, income tax, capital gains tax, etc. Direct tax collection net of refunds stood at 8.71 lakh crores, which is 25.71% higher than the net tax collections on a year-on-year basis. Now, according to the government, this collection is 61.31% of the total budget estimates of direct taxes for FY23. Refunds amounting to 1.83 lakh crores have also been issued so far in this fiscal year, which is 61.07% higher than the refunds issued during the same period in the previous year. Now, both personal income tax and corporate income taxes also performed much better than anticipated thanks to the higher compliance and a favorable base effect. While higher subsidies, lower than expected disinvestment proceeds and duty cuts have impacted the fiscal deficit targets, robust growth in taxes may help the centre meet its fiscal deficit target of 6.4% of the GDP for this fiscal year. The government had set a target of 14.2 lakh crores via direct tax collections for this fiscal. However, the government expects the direct tax collections to be revised upward as it is likely to substantially exceed the budgetary targets by at least 1 to 1.5 lakh crores. So what does all of this news mean for you? The uptick in the IIP growth and the other high-frequency indicators such as core sector growth, auto sales, exports, GST collections all point to a strong growth. This will have an indirect positive impact on you. The continued robustness of direct tax collections will help the government in meeting its fiscal deficit targets for this fiscal year as well. This will have an indirect positive impact on you as well. While I say this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.